you don't want to save too much because you've just got your first paycheck, so you want to go and spend some money and, go to the pub and see your friends and do all of that cool stuff too. And so, don't kill yourself over, I must invest now. Enjoy your life too, but just start planning, okay, what is it that interests me? If it is Web3, okay, what is my strategy to invest? What is my time horizon here? But I predicted the financial crisis and also the European crisis in 2012 when we almost lost Europe. And in both of those, people would come up to me in the street, friends of my parents, friends of friends, and say, why didn't we know? People in Spain, where I was living, got decimated. Friends went bankrupt. The entire property sector collapsed. And I thought, why didn't people know? And I thought, I need to do something about this. And that was the democratization of financial information. So it doesn't just belong to those at the center, it belongs to everybody. And so that's what the idea behind Real Vision. We thought, well, how do we do this? This was 2014. We were pretty early to the video thing and said, what we're going to do, people said, well, what you need to do is short form, 3-minute interviews. Nobody's got an attention span. And we said, no, we're going to interview the world's most famous investors, the very best that there is that exists, the world's best analysts and strategists, and we'll talk to them for an hour or longer. And that was revolutionary at the time. Now people do that more often, but Real Vision led the way. Indians traditionally have put it into gold as well. Well, gold just offsets the weakness of the rupee to maintain global purchasing power. But for people to start investing, they need to think of simple things like dollar cost averaging. I mean, the Indian stock market has been going up relentlessly for 2 decades. And the story's only just started. It's a young population. The technology advances within India are enormous. We've got some world-leading companies like Reliance that are growing out of India. India's important geopolitically. So if people can just start investing in their own market to start with, just by putting a few rupees every month into the market, that's a better start than their parents would have had. So I think it's very important that people start this journey now, start to learn how to invest, get the educational tools that they need, and just learn as you go. Investing is a lifelong journey. It is not a single place. And we actually are passionate about this at Real Vision, that we've created something called the Real Vision Academy, and we've got special pricing for India. So go to the Real Vision website looking for India, and there we've got the world's best experts, not just some random person on YouTube, but experts who've been in the financial markets for 30, 40 years, teaching you how to be a better investor. Yes, the debt is not the answer to growth. So both China, the US, and Europe, and Japan fueled a 2-decade boom or 3-decade boom driven by debt. So anybody can look rich by borrowing money and buying stuff. But you don't own it. You have to pay it back. And this huge amount of debt is a drag on these global economies. India doesn't have that. It doesn't have it at government level. It doesn't have it at international level. It doesn't have it at household level. If they can avoid that one trap, which is excessive leverage, you can have some debt. That's okay. You want to buy a house, stuff like that. That's okay. You want to start a business. That's fine. But don't use debt to hide the lack of growth by faking growth, because then you're going to create exactly the same dynamic that China's created, the US has created, Europe's created, the UK's created. So that's the big lesson for India for me. So I'm actually very, very constructive. And crypto raised globally something like 60 billion in the last 18 months. So all the crypto companies have got cash and they can just not worry about the fact that crypto prices are down, and they can just build their businesses ready for the next up phase, which is really, really good. I've been in the crypto market since 2013. So I've seen it up and down. What you need to do is focus on the big picture. Where is this going? Because what you've got is an exponential adoption of an asset class with an exponential price over time. But everything that's exponential is volatile in nature as well. Just look at the Amazon share price since it IPO'd back in 99. Went down 96%, then up, then down, and until you get network adoption and the network becomes mature. So if you extrapolate the rate of change of the adoption of Web3, it's the fastest adoption of any technology ever. So to extrapolate out the 300 million global users now, assuming that network adoption rates slow down over time, because you can't, the earlier phase is the most exponential, we still get to 3 billion users in like 5 years. Let's say we're wrong by 75%. It's still a billion users. So therefore, don't focus on price. The future price will take care of yourself. If you're focusing on price in building your business now, you're building a weak business. You need to factor in the ability to take these very volatile swings as part of your business model. We have to distance ourselves. I do this. We do it with our investments, right? I'm in it for the long term. I don't even trade my positions. But I still have an hourly chart on my screen next to me. But I distance myself from my hourly chart, right? I don't look at my positions and figure out how much I'm up or down every day. I just don't care. But I'm very interested in what the market does. But so you have to, particularly as a founder, is distance yourself from the noise and focus on the big prize. That's why you're building a business. You're not building a business because you want to make money in the next 18 months because crypto goes up. You want the opportunity of the big prize, which is building something big and important, because this is the only opportunity that I've seen where you can build a business that goes from nothing to $10 billion in a year. So keep your eye on that. And imagine what that business could be worth in 10 years' time. So focus on the big picture. Important, Poorna, is not to take this as success or failure of the space. And is my startup valid? Am I doing the wrong thing? Should I have left my job? Right? You're going to drive yourself insane doing that. It is not a real-time scorecard on how your startup is doing. Your real-time scorecard on how your startup is doing is, am I building network adoption amongst what I've built? Have I got customers? Am I delighting them? Have I got a community? Are they talking to each other? These are the things focus on. Well, it depends for different people. It depends what age you are, what income you have, how stable you are in your job, what your future vision of yourself is, what do you want to get out of it. So I'm 100% of my liquid net worth in this, but I have income. I have property. I have, shares in Real Vision, a whole bunch of stuff, right? So even if my crypto goes to zero, it doesn't really change my life. It will be miserable, but it doesn't change my life. If you are young and you're trying to build a future for yourself, then look, I think crypto is one of the biggest opportunities we will ever be given. So you should be reasonably aggressive in it. I mean, I'd be more aggressive than others are. So if you've got an investment portfolio and you're young, I'd suggest if you're dollar cost averaging in, you're not trading it, you just want to build wealth in this asset class that grows over time, then being 20, 25% of your savings or investments in crypto is fine. You can have some in the Indian stock market, some in bonds, some in diversified global stuff, and you're pretty much going to set up for great success. Now, if you're 60 years old, I wouldn't say the same thing, because it's an element of risk and time horizon. Crypto's a long time horizon because we're talking about 10 years here, where we think the big bulk of the returns is going to come in 10 years. So that doesn't really help somebody who's 60 years old, because what they're thinking about is my retirement. So in which case I would have a different discussion with them and say, sure, have some of it because it's great, because it'll offset, the rupee, it'll offset other things. So maybe you can think about 5%. So even if it falls 50% again from here, what are you going to lose? 2.5% of your portfolio? Nobody cares.
Right.
But if it goes up 20x or something, well, okay, that becomes a lot of money. And every crypto cycle, it goes up 20x. This is something that most people misunderstand. There is zero correlation between the equity market and the crypto market over a larger period of time. One is exponential and the other is not. So what you're picking up is the periods when crypto and traditional assets are overwhelmed by the macro, which is to the earlier part of your question. So what is happening on a macro level that is affecting all asset prices in the shorter term? Liquidity is coming out. So what's that saying is the central banks are pulling money out of the markets. So obviously asset prices fall. The other thing is there is more correlation with the growth end of the technology market. And the growth end of the technology market, because it doesn't have cash flows, is driven by inflation growth expectations. So as inflation rises, it gets marked down because your future cash flow is worth less. So once we return to a more normal point where inflation is more stable, that disappears as a factor. So then everything gets judged on its own merits. And crypto's not separate. People in the crypto market thought they were some amazing unicorn that never gets affected by global macro until they got hit by global macro hard. And they're like, oh yeah, it does all matter. I need to understand how currencies work and how money works and how liquidity works and what central banks do, because it matters. But over time, there's no correlation. So it's kind of ludicrous because the outcome will be tokens or digital assets of some form. Yes, you can have private sector blockchains, but generally speaking, if you want to have innovation, you have to accept this. And that's okay. If they can just stop thinking of them as currencies and thinking of them as digital shares, okay, that's interesting. What, we can invest in Polygon? And Polygon is a really interesting business. So why don't we allow that? We don't think of it as a cryptocurrency. Is Polygon a cryptocurrency? No, it's a token. It's a share or a stake in an ecosystem and a network. So it's again education of these people. There's probably only one that is actually deemed to be a currency, which would be Bitcoin, because there's so other little use case for it right now. And I think it's a matter of education, because again, same with everywhere. The Indian politicians are a lot older than the general population. So what they're trying to do is look back at the past and this defensive structure. But there's always, we're seeing it in the US too, right? The average age of a politician in the US is 76. And that's just not representative of the population. What gets you excited? Where your mind drifts to? Because if not, people tell you how to invest in certain ways or in what to invest, that if it doesn't suit you, if it doesn't speak to you. So if it's Web3, then learn about it. Look at the charts, understand how the market works. What should I be doing? What is my long-term strategy here? You don't want to save too much because you've just got your first paycheck, so you want to go and spend some money and, go to the pub and see your friends and do all of that cool stuff too. And so, don't kill yourself over, I must invest now. Enjoy your life too, but just start planning, okay, what is it that interests me? If it is Web3, okay, what is my strategy to invest? What is my time horizon here?